Hey there, Bookkeeping Side Hustle community. It's Kate. We are here today for a very hands-on lesson to learn about how we can start offering accountable plans for our clients. It is something that I've been hearing about in my 4 years of doing this business, but I have never actually implemented one. And I was able to take a course from our guest, Josh Standley from DKK Accounting, and I had a few more questions, and so I thought, well, why don't I ask him those questions in public if he's willing, and then it might help some other people too, and I'll get my questions answered. So Josh is here. He is an expert on this. He has a training on it as well. And so what you're going to see today is the template, the accountable plan template that comes with his training. I'm not going to show the training, but he's given our group a discounted link, which will be below. So make sure you use the link below to buy the course. And then also there's a code SCORP Hustle, all caps. That code will be below as well, which will get you a further discount, I think 20% off for life. So whenever you're watching this video, if it's years from now, you can still get it. And this template's really handy. And my understanding is that I can use this with my clients as well. I need it for myself, and I can use it with my clients as well. So that's what this is going to be about. We're going to actually walk through two exact examples of filling out the template and then entering it into QuickBooks Online. One business owner is going to be kind of like me because I need some help on my own accountable plan. And then I have another example of a specific client who needs this as well. So Josh Standley's our guest. I would like for him to introduce himself. And then after you do that, Josh, I don't want this to be an Accountable Plan 101 course. Like everyone's going to have to go learn a little bit more, I think, or take your course before they fully understand the example we'll work through. So if you don't know anything about accountable plans, this might not be the best video to start with. But tell us a little bit of background about accountable plans and S-Corps and why we need them and what they're for, and then we're going to get into our examples.
So the short version is an accountable plan is just an expense reimbursement policy. And, if you're a Schedule C filer, you're pretty much going to take a home office deduction at tax time. But if you're an S-Corp owner, that's not available to you. And you really need this accountable plan to get those deductions how you used to take it when you had a Schedule C. Does that answer your question, Kate?
Yeah, I was gonna say that. So this particular client of mine that really kind of brought this to a head. So I've just kind of avoided using it because I also don't really take home office stuff. And I'll tell you why I don't, and you can maybe convince me that I should be. But I knew this guy, he became an S-Corp as of January 1. And I'm like, all right, I can't put it off any longer. I gotta help him. And he very much would benefit from this. There's no question about the mileage and the home office and all that he needs to be claiming. So yeah, that answers the question. So it goes hand in hand with S-Corps. So when you for me, I serve pretty simple clients. I think all my clients are Schedule C on their way to S-Corp. That's sort of who I help. So this is going to be a great tool in my quiver that I can start to offer to these guys, these folks that I'm already helping. So, and I need to use it for myself because I became an S-Corp last year. Let me look at my notes here. I wanted to remind you, you said you messaged me that you wanted to say something about Bookkeepers. Did you want to say something about that now?
Yeah. So for those who are bookkeepers, I mean, you are the first line of defense. Now, 99.9% of the time, a client's going to bring those numbers to an accountant to do their taxes, and the accountant's not going to go into the numbers and make sure they're deducting things correctly. So as a bookkeeper, you're really the first line of defense because your clients don't understand tax. And so you're really helping them. You are super important. So it's just important to make sure that you get the proper training and are doing things correctly, because you're more important almost than the tax preparer, I think, sometimes.
Well, I think the fact that you said that once someone becomes an S-Corp, the home office and mileage deductions are not easily available to them anymore, just right there on that tax form. That's a big takeaway from this, because a lot of people just on their own are going to start off as bookkeepers, for their own business. That's the community that's listening right now. Start off as Schedule C filers until they build their book big enough to have the income that justifies becoming an S-Corp. So, okay, well, why don't I bring up a screen share where we show your Excel template, and then we'll walk through that. Let me change my little view here and change my background here. All right, so nope, that's not what I want. That's my questions. I want this guy. All right, let me see if I can zoom in. So guys, this is what you get with Josh's course. He does a lot of teaching before you get to this part, but I hope it's zoomed. Let me zoom in a little bit more even. You would, I guess, be able to kind of figure this out. But the beauty of what Josh has is he has all these like formulas that are calculating for you. So especially since you can just rinse and repeat on each client, like I think it's totally probably worth just getting the resource, especially with the generous discounts he's giving. So anyway, I called this test company. Actually, I'm going to delete these because I had some different numbers I wanted to use. So home office, we got monthly expenses, variable home expenses, automobile expenses, office expenses, and out of pocket. That's going to then give us the journal entry. So that's how this resource works. And should we just start putting in numbers, or would you like to talk through some of like the blue lines, the general categories first before we do our test cases?
Oh, we can go through it together. I think that'll be the easiest.
Okay, so do you want to just talk through this home office thing, or do you want me to give you the numbers that I had picked for my this example is going to be kind of like me.
So, basically we're going to start with, you're going to figure out how big is your home office area, and then how big is your square feet of your entire home. That's going to give you your business use percentage, which works with the rest of the worksheet in order to calculate what is a reimbursement.
Okay, so speaking of home office, so I'm sitting in this tiny little room. It's like this weird add-on that the previous owners did. It has no closet in it. So, but I guess it's an office, but it's only like 7 feet by about 10 feet. It's really small. I have a desk in here. I've got an extra monitor, but I also have some wrapping paper behind my computer, and I have my kids' clothes that are outgrown a little bit before I can take them to Goodwill. Does this count as a home office? If I'm also my kids do homeschool in here sometimes. My husband does his, leisure stuff in here. Is this a home office?
So the home office should be regularly and exclusively used for business. The fact that you have a couple things in there, I probably wouldn't nitpick about. Now, if you were saying, hey, my living room's a home office, I couldn't see that being justified.
Right.
In your situation, I mean, it just happens to be a couple extra activities happen. The majority of what you're doing is for your business. So
Okay.
I probably wouldn't worry about it personally.
Okay, well, I'll get my measuring tape out. But so for this, what did I put? Shoot.
If you said
okay, I said 185 square feet out of 1900. That's not exactly right, but we're going to use it for. That's not exactly right for me, but we'll use it pretty close. So, and then my home, I say, is 1950. I got a little small home. Okay, so this is my situation. I definitely have a tiny office in a medium-sized home. So now what is this telling us?
So that's saying the business use of your home is 9%. And so that means 9% of all the household expenses. And then we're not talking groceries, right? But utilities, sure, repairs, all count towards reimbursement.
Okay. So this is what we would do, guys. So for our clients, we just trust we trust that there is using it exclusively, and we trust their calculations when we provide them with this template.
You can't live with them, so there's no way to know. You want to educate them at least to say, hey, this is kind of the rules behind it. And what we like to do is tell clients, hey, if you can, get your home office ready, take pictures of it now, because then it's done. Because then it kind of shows, look, this is my home office. There's my desk. There's my computer. It's just, documenting things before an audit happens. Hopefully it never happens to you. But
so I'm thinking about how to even further maximize this template. I've been thinking about it a lot. If I made an extra tab, an extra worksheet down here, because in Excel, you can pop like images on it. Could I put the image like down here in and call this like picture page or something like that?
Yeah,
If that makes sense.
I wish I thought of that idea. That's great.
Okay. Okay, yeah. So y'all can just like cut and paste onto just dump it in here. And then I guess the plan is, Josh, we resave this every month. Is that how the template works? So I'm calling it test account right now, but I would label this 202201 for January or something, and then accountable plan. Okay.
And what we like to do is have a written accountable plan policy. It's just further documentation, which is included in the course, that you have established a written policy, because it's just more evidence towards, hey, I'm doing this correctly and methodically.
So I apparently missed that part of the course. So that's like a Word document?
Yep, it should be in the course.
Okay. We just changed the name or something? I mean, or is it a lot of legalese that doesn't matter a whole lot? Or what is it?
Basically, it's just an agreement saying, hey, we as a business agree to reimburse certain expenses for the business use, right?
Okay.
And it gives some IRC, Internal Revenue Code, sections of safe harbors. And the reason why this is designed monthly is because, one, I want it done monthly because then it reflects your income and expenses better. And two, you definitely meet the safe harbor, which is kind of like a give me, like, hey, if you follow these rules, it fits under that accountable plan. And it says like 60 days you need to reimburse with, but if you do it every month, you're covered, right?
So why do you have a tab on this sheet called quarterly? Is that for the slackers?
Yeah.
Okay. Okay. So quarterly is better than annually, and monthly is correct, and 60 days is like the official like thing. Monthly is best for cash for cash flow accuracy, and then 60 days is kind of the official. Okay.
Yeah.
Okay, now we're in monthly home expenses. So I've got my calculation, and I kind of peeked behind the equations, but y'all, this number, this 9% number, is flowing through like a lot of these a lot of the equations in the gray boxes. So as that changes, it flows down through the worksheet. Okay, so monthly home expenses. So if we do me as the example, I don't rent my home. We own our home. So the example I put here is mortgage of $2,000 per month. But I didn't know how like insurance, interest, and property tax truly factor in, and what the mortgage, how the mortgage factors in as well.
So you can't take the actual payment of the mortgage. What you get is the interest and the property taxes and the insurance. Now, one way to do it is kind of look back at last year, and you can kind of figure out what this will year be. It doesn't have to be perfect. The closer, the better, but it doesn't have to be perfect, right? Nothing in life is perfect.
So you're saying that I don't need to get my mortgage statement out each month. Instead, I could say, what was my total mortgage interest for 2020 and divide that by 12 and just pop it here?
That's one way. If you have the statement, even better, because then it's 100% accurate, right?
Well, and so I was thinking about that statement, and then adding here, like if we have this extra sheet that we added that's called like the picture sheet, I was thinking if I got the mortgage statements, you can use Snagit or Snippet, whatever that I'm capturing my screen all the time, and just plop that in there too, for that month's documentation of the mortgage statement. Does that work?
Yeah, and what I would do is I would save it all as a PDF, right? So you can't edit the calculations, because then it's set in stone, right? Here's all the calculations. It's saved as a PDF. You can't edit the PDF numbers then. If you just save it as an Excel file, it still works, but I feel like the PDF is better because it kind of locks it, so to speak.
How does Excel work? Like if I put pictures here in sheet 1, I'll label those pictures. If I put save as PDF, is it saving all my worksheets or just one worksheet at a time?
You can select at that point what tabs you want to, or you can select them all, and then it kind of pre-selects them. So
that's awesome. I didn't know that. Okay, so let's, in this example, we're going to say mortgage interest of $150 per month. Now, property taxes, I was asking my husband this. We pay property taxes twice a year, but I know some people pay it as a part of their mortgage as well. I guess if we pay twice a year, I take my bill and divide by 6, or do I wait until, like, can I just do that in the June and December one and have a bigger accountable plan deduction that month and just do it once do that expense twice a year?
Personally, I like to do it monthly because you're really
Okay.
dividing the expenses and allocating in the month that they happen. Now, if you were to base stuff on last year, your property taxes in the ensuing year are probably going to be higher, right? They don't go down. So
Yep.
you're actually underestimating, you're being conservative. So
Okay. So do you go back and adjust for like the $120 increase or whatever? Like,
it depends. I
okay.
might, but it might not be worth a couple extra bucks of expense, right? Sometimes it's, what's a dollar in tax, right?
Right. So I'm putting 75 as a 12th for this example. Now insurance, that it counts as well.
Mm-hmm.
All right. So we're putting numbers here, guys. So you can see, oh yeah, we are a part of a pitiful HOA. All we get is a pool and some rundown tennis courts. But I would say actually it's not even 30. It's not even that much per month. But I could put my HOA in this as well.
Yep.
It just seems so wrong. Like it doesn't seem like I don't need to be in an HOA to run my business.
No,
like
but
I didn't buy this house to run my business. I don't know why I have like mental hangups about claiming too much. I don't know.
the issue is that so you have a home office, but 9% of all your spending are really towards that business. It's you're heating the entire house, but 9% of that heat is going towards your home office, right? 9%, right? And so I wouldn't have a hang up about it. It's just the way it is.
It's just the way it is. Okay, so this is. I've had lots of different like moments in my business where I definitely didn't feel like a business owner at the beginning when I was like, I had one client and she was kind of like friendly. I don't know, like it was not like super professional. I wasn't not professional, but I've had different moments where I'm like, this is what big business owners do. Like I'm putting the big girl pants on now, and so that's maybe what this is like. Starting to claim more. So utilities, that would be like gas, electric,
Garbage.
Oh, garbage. Okay, yeah.
Everything, right? Everything.
Everything. Okay, so we put
being super aggressive about this. You're only taking 9%. But if you wanted to be conservative, you can exclude whatever you want too. If you just, it's what you're comfortable with. Some accountants are way more aggressive, some are more conservative. And what are you comfortable with? Find what you're comfortable with.
Okay.
That's my always.
So for utilities though, I would have to do like a screenshot of those bills as well, and I would pop those in there.
That'd be great. Yeah.
Okay. So that's the documentation. So we'll just call this, looks like our example has me at 605. So I get a whopping $57.40, which is not chump change when you multiply that by 12. Okay. So now we're in variable home expenses. This is where I was really like feeling sketched out, like repairs to my home, like, or just to the office. Like, I don't know.
So if it's 100% office, you're probably not going to use this for that, right? You can just write that off as 100% expense.
Like charge it on my business accounts. Okay.
Yeah, you buy a desk, you buy a computer that's just solely for work. I mean, you're not going to run it under the variable, but the variable home expenses, I mean, again, you're allocating 9% of everything of the upkeep of the home towards the office.
Like we got new gutters. Like, should I put that on here?
You can, if you don't feel safe or comfortable about it. You can be conservative and leave it off. I do personally.
Okay. I have one window in this room, and we got new windows 2 years ago. So that would have been like, maybe I could have done like one window's worth or something that 1 month. Okay. Well, I'm not putting anything in repairs for me. I do have someone come help clean the house twice a month. It was $95 a time. So I put that in here. That count, that's fine, right? Lawn care, I just could not. Like, well, first of all, I'm the lawnmower of the family because I consider it exercise. But we can really put our mow. Like, I don't know. I just was like, that just seems so wrong. But I guess people can put lawn care here, guys. What goes in other costs? What are some examples of other costs?
Oh, I can't even think of any off the top of my head. It's just there in case there's something not specifically allocated. I don't have a great example. I wish I did. Didn't even think about that. No, it's usually never used. So.
Never used. Okay. So this number right here, is a sum of 57 and 18.3. It looks like. All right. So now we're in auto expenses. This is where, so I want to do my example first because I have a simple one. But then I'll do my client who I drove 15 miles in January. So I put that in here. This total miles driven, I don't know that. So did I just blow it for the month, or is this number required?
It just gives you the business use of the vehicle, right? Because you need that if you're going to take actual expenses. We just can't say 100% of actual expenses is deductible, right? So you need the business use of the vehicle, which helps calculate the actual expenses, and then it compares what's better, mileage or actual, and give you a foreshadowing or a tip. Mileage usually is always a better deduction.
Mileage is usually better. Okay, so maybe when we come to my client,
it's not better if you don't drive as much, right? If you don't drive as much, actual expenses will be better for you. And you can reimburse under either method.
I just feel like the juice isn't worth the squeeze for me trying to, like, I would rather just say, like, I look at my calendar and I'm like, oh yeah, I went to a networking meeting. That's all I did in January. I went to a networking meeting, 7.5 miles there, 7.5 miles back. I would rather just, like, to me, like, the thought process of doing all of this wouldn't be worth it for me. So what's the tipping point? Like you said, the more someone drives, the more mileage wins.
Correct.
Okay. So I don't drive much. So maybe you're saying, well, I don't have an auto loan. Our cars are owned outright.
My S corp, I'm an S corp too,
Sure.
and I own a vehicle. And I don't drive much because I actually have a separate building on the property that's 100% office.
Okay.
I take actual expenses, and I don't use this because I have the S corp own the vehicle. I only use it for business. But actual expenses are going to be better than mileage for me, anyways. And you can't take mileage if the S corp owns the vehicle. So I'm just going to have the business own it, and I'm just going to write off all the costs. So it was
Got it.
And doing this, like you said, the juice sometimes isn't worth the squeeze, but
So let's just say to this example. So I don't have interest. The car is, so this depreciation one, what does it mean if car is owned? If car is owned by the business?
if
No.
you own the car, if the vehicle is owned by the business in S corp, you're just going to write off all expenses.
Got it.
Vehicle. I usually don't use depreciation. It's usually most of the time it's mileage because that's going to result better for a small business owner.
If we wanted to use the gas, this fuel, is that all the fuel for the month?
Correct.
Is that all the fuel, all my fuel bills?
Yep.
Like, I'm not tracking that. No way. Sorry. Like that's not. I think I think the easiest thing, like, for the type of clients I have, is just like use your calendar, mark your business meetings, and we'll take the mileage. That just seems a lot easier. I don't know
how it goes. Yeah,
it's usually how it goes. Okay.
To try to get all this information, sometimes you're especially as a bookkeeper, you're tracking everything. They're not going to track their personal stuff. They might start doing a better job once you introduce this to them, but you're probably just going to end up using the mileage section of this anyways.
Well, so I didn't put a whole lot of numbers in this gray box, but what's happening here in this calculation box? It's got a big equation. So it's taking 15 miles.
It's giving you the greater of the mileage or the actual expenses. And you can't use the actual expenses unless you have the total miles because it's allocating a percent of the actual expenses. Does that make sense? And you can actually change this equation. This is probably all that says 54 cents a mile. You can look up the standard mileage rate. It's password protected, so your clients can't edit it. There's no password on it, so you can, in the course, you can customize this to your business theme, color, and whatever password. Because I don't want clients editing it and messing stuff up.
Sure.
So you can change that mileage rate and say, well, the actual mileage now is 56 cents. So what we usually do is just use the standard mileage rate issued by the IRS, but you don't necessarily have to use that.
Okay.
You can reimburse however you want, realistically, but I like to keep everything, within a conservative aspect first before I.
Sure. So. Well, I was wondering if you could tell this $16.43 what that was pulling. Is this giving me actual, or is this giving me the mileage deduction? Can you tell?
Actual, because 15 times the 54 cents in the equation would have been $8. So that's giving you actual.
Okay, so in this example, this is an example of how Josh said the more you drive, the better mileage, the mileage IRS mileage rate is. But I'm also thinking $16 versus $8 versus me trying to go find all this stuff and track my fuel use, like, is not going to happen. So I know for me, I'm going to not do this, and I'll tell my clients, like, unless you're logging every time you fill your car with gas, like, we're just going to do mileage. Okay, office expenses. I put $56 for internet cost, $40 for cell phone cost. We have a really good military plan. So technically our family bill is $80 a month. But I'd have to divide it by 2 because we've got 2 phones, right? So really it's only 40, and then it's a percentage of that 40, right?
Correct. This is calculating 80%, which is conservative. The IRS actually came back and stopped fighting. They removed cell phones as listed property, which there was rules on that. Basically, you could get away with 100% of cell phone, but I like to be conservative. It'd be like, look, we could have done more, but we only took 80%. And if you really wanted to, you could even do less if you really didn't feel comfortable, but
so this is multiplying by 80. Yeah, I mean, so do I text do I use my phone as much for my family as I do for my business? For me, the answer is 100% yes. I'm texting about basketball this weekend, and I'm texting the teachers because we've got like party at school for Valentine.
So it used to be the IRS would want you to prove how much business usage of the cell phone is. They basically got sick of fighting it because people were having issues, and they just said, we're going to remove this as listed property. You could probably get away with 100%, but I think 80% is
okay. Well, I'll trust you on that. I just know that we use, like, I live a full 6 in the morning to 9 o'clock at night life, and it's definitely not all work. So, and I live on my phone. I mean, I'm using it all the time. But okay, so this is the office expense. Also, I wanted to. Nancy Greco gave a great advice about the fuel expense method. She said if you use one card for gas only, that then it's easy to track your fuel use. So that's genius. So I won't be as grumpy about how, no way I'm tracking that. I mean, it'd be easy to give that advice to a client when they say, like, I can't do it. Like, well, here's a way to do it. And Nancy's I'm going to jump in with a question, Josh, before we go on. Nancy's asking, is it best to pay bills through the business and allocate the personal portion to shareholder, or pay personal and then reimburse?
So you should pay these personally and then reimburse with the business with this worksheet is the correct way.
Okay. Other out-of-pocket costs is the next thing: travel costs, parking, business, and other expenses. So I do this differently. I'll tell you how I typically do it. So I would pay for parking with my business debit card, and travel too. Anytime I don't do it, I reimburse myself. So I kind of treat it as like an accident, and I just send that money to my business account from my business to my personal right away, and I just make a note that that's what I did, like accidental personal use reimbursed by the business, and that's how I get that equivalent charge in my books. So that's not the right way to do it.
No, that's completely fine. That's
fine too.
Under an accountable plan, basically, you're accounting for it. You have the proof of receipt or deduction.
Yeah.
Reimbursing it to yourself. Perfectly fine. This is just, maybe at the end of the month you do this, and this is an easier way to do it once.
Okay. All right. So now we're getting to the journal entry. So I've got $168.66. I'm going to write that down. So actually, I'm going to write.
I do this. One is the one laid out this way. Another way that I like to do it is I just do a really easy journal entry. I'll debit accountable plan, and I'll credit shareholder distribution. Because then I can see all my accountable plan, how much I'm getting reimbursed in one account. It just depends. I mean, there's no, either way works.
Wow. Okay, hold on. I think I did skim over that part in the course, but so you're not taking the time to get this super detailed, because in the event of an audit, we have this as the backup, and this is all the details that are making into this one smushed up number of $168.66. So I guess I was thinking you were going to tell me to send the money, like to take the cash. So you're doing this as in totally non-cash.
It depends.
Okay.
The best way is to actually reimburse yourself for the money.
I want to do that. I would like to do it.
It should be done, but that doesn't happen. This is life. And so if they're just taking distributions, the other way is saying, hey, part of these distributions are for this accountable plan. So it depends on the client. You know, some clients you can hound and say, hey, you need to write this separately. They'll never do it. They just won't. And so what we're doing is reducing distributions and saying, basically, if you took a $500 distribution that month, part of that distribution is really for this accountable plan stuff.
So they've gone through the trouble of getting you this spreadsheet. They somehow send it to me, so I know the number, but they're just not taking the time to do the draft.
Correct.
Okay. Well, I was thinking that the bigger problem would get them to do this at all. But then there's another crop of people who do this, but then don't take the money. I want the money, man.
Yeah, it's a great way to get your money. And the reason you want the written plan and to do this is that it's keeping these amounts from being taxable. If you don't have this documented, technically any reimbursement could be considered taxable, subject to payroll tax and penalties. So it's
right.
important to have this. And, you know, you can separate it out like this because it gives you a little better picture of your business. But sometimes I like to just show on, you know, its own expense account, accountable plan, so you can see how much are you getting reimbursed.
Yeah.
The client likes to see that. So
let's I'm going to have us go to QBO. Let me see if I'm still logged in. Okay, I'm here in Craig's landscape. So we would go to new, we would go to journal entry. Okay, actually hold on. Say that so the amount we're working with here is $168.66, and say that the business owner did took $168.66 out, and I see that coming through the bank feed. So let's talk about that example first before we do this journal entry. Can I just tag that to accountable plan and attach the spreadsheet as to that transaction?
Yeah, definitely. That's one way.
If not, then like say I do this first, and then it's like a whole month later that he finally sends the bill. So it's almost like we want an accountable plan liability.
Yeah, I think it'd be a liability, and then when it's paid, the check would come in and you pay against it. There's so many ways to do this. You know, obviously the best way is they write the check. The check comes in the bank feed, and it can match up to your journal entry is one way. You can just split the check or just code it to accountable plan. I mean, that's an easy way to do it, especially if you just want to track all the accountable plan stuff.
I like the accountable plan method. What I'm trying, I guess I don't understand how. If I make this journal entry, so actually let's go ahead and do it. Let's see. So the number is.
These accounts won't exist in that.
So we'd have to make an account.
It might exist in some aspect, but if it doesn't, you might have to create them in your books.
Accountable plan. We're going to add accountable plan. It's going to be an expense. Y'all, sorry if this is like total junior varsity, but I know that this is something that I would have wanted to know. Where is other? I'm just going to go other. Accountable plan. So we go save and close. So this is the expense. So we're going 168.66. And what am I putting here? What's my credit?
Put the bank account.
The bank account?
Through,
okay.
Because when the check comes in, it's going to automatically recognize there's a match with the journal entry.
That's how you get the match. Okay, that was what I was missing. I didn't know how this journal entry would get the match. Got it. Okay. All right.
Being an expense and crediting the bank where the check is coming from.
So y'all see that? I'm going to zoom in. Sorry, guys. Let me zoom in a little bit. What date would I put? Would I put January? Like, well, yeah. No, tell me. What date would I put? I
use the end of the month, the 31st.
So if this
after all the expenses, or maybe you're in June, at the end of the month.
So if this is January 31st, but I don't get my butt in gear until like February 15th to send the check, is it still going to match it properly?
It should, yeah.
Okay. And then, so down here in memo, I might do accountable plan Jan 2022.
Yep.
And then the attachment is the Excel spreadsheet.
Yep. And save it as a PDF and then attach it. I just feel like it's way better because then you can show that the PDF will show, if you really want to go into audit purposes, the date you made that PDF, right?
Okay.
You can't change the PDF. If you just put the Excel spreadsheet in there, right, you could technically edit those numbers. It's just a little extra step, and maybe
No, I like it.
OCD.
I'm zooming in, guys, so hopefully y'all can see this. I got my journal date as the last date of the month. This would be what the spreadsheet counted as my expenses. And then we're booking it to checking. So then in mid-February, when I get around to sending myself the money, it'll match. And just to be clear, we have simplified this journal entry down here. Josh is saying that this is like the super thorough way to do it. But I like his example of just having one thing called accountable plan expense, which I still think is going to be like wildly more documentation than probably like most people out there. Like people aren't on the ball about this, I wouldn't think. So even just calling one account accountable plan seems like a reasonable thing to ask clients to do. And it gets the point. It gets the point. Like, these are your home office expenses. This is your cleaner. This is the mileage that you drove. So
it just, to allocate to the automobile expense is nice because you see what's going on. The IRS really doesn't care what category you put in expenses. What they do care about is that it's legitimate and deductible. So,
okay.
The fact that I have an accountable plan line is it's nice because you can say, hey, this is how much money you're getting out of your business tax-free. So clients like to see it. Some business owners have a lot of, like example, a real estate agent who could be an S corp. They're going to get a huge deduction sometimes because they drive a lot.
Yep.
And it shows them, hey, this is how much you're getting tax-free because a business deducts it and you don't claim it as income. So it's nice to have that line item.
All right, I'm going to move us along because I want us to talk about my specific client who has a Tesla, and he wants some of this. He wants some of this on the books. Okay, and he also rents. So we're going to let's keep his house the same size as mine, but his rent, let's call it. He lives in California. I don't know how much it costs there. It's a lot more than here. $3,000 in rent. So for a renter, we'll go no mortgage interest. Does he? What about like renter's insurance? Would that be on here?
Yeah, you can put that under the home insurance section.
Okay, so we'll leave that as 100. We can leave his utilities the same, HOA the same. Possibly, maybe he has to. No, the owner. Let's say the owner pays that. Okay. This is a bigger deal because he's a renter versus a homeowner. What's the? Explain why this renter is going to get a whole lot more of a deduction than the homeowner.
It's really not about rent versus own. It's just about that there's more expenses is really what it comes down to,
But I mean, what if he was a homeowner and it was $3,000? Like, it's costing him that much to live. Is it? I guess I don't. Is it because the portion of that is really like an asset and it's only the interest that's the expense?
Correct.
Okay, got it. I hope that made sense to other folks. Okay.
It's important to note too, and this should be told to the tax professional, is that if you're taking these home office expenses, you can't necessarily deduct 100% again on your Schedule A. You have to subtract off of that.
Okay, this is a big deal. So
if you're writing, in a year $1,500 of mortgage interest, and you go to deduct it, and it shows on that 1098, which is your mortgage interest form you get from the bank, and it shows $3,000, you need to subtract, deduct it from that before you can itemize because you're already deducting it. You can't deduct it twice.
Got it. That makes sense. What about, before we move on, actually, I was thinking about this concept of depreciation, and when businesses like depreciate their home, they have to recapture that back when they sell or something.
Correct.
What is all that about?
You're getting this deduction that you normally don't get. So when you sell, because you subtracted a value of that house. When you sell, you can't write off the full cost you paid for the house. You have to subtract what you've deducted to make it fair, right? There's always a balance when it comes to tax, but there's no depreciation factored in here. It's
Yeah.
just, so it doesn't matter. As an accountable plan, you can reimburse for whatever you want in a sense, as long as it has a business purpose. It's just not worth getting into that deduction. So if you're using this, you don't have to worry about depreciation.
Exactly. Okay, cool. Because I was not wanting to start doing this and then having like troubles on the backside when we sell this house. So in this particular example, y'all, we're not claiming depreciation for the homes. Okay, we can say his cleaning's the same. All right, business miles driven. I'm going to really jack this one up because he says he drives like all over Southern California.
Now, he has to own the vehicle personally.
He owns the vehicle personally. Yep.
S Corp owned it, you would just write it off as a business expense.
Okay.
Or not for the mileage, for the actual expenses right through the business account. But since he owns it personally, you're going to put the mileage in here like you're.
All right, so let's call it $500 per month. Sorry, total miles driven, I don't know. He says he mostly drives for work, especially because of COVID. So does he need to put this number in here? Let's call it 575 maybe.
He should have the number in there. However, what you could do is you could edit the worksheet to just calculate reimbursing for the miles he drove.
Basically delete lines 40 through 47?
You'd have to change the calculation a little bit in there. So what I might do is say, if all we know is the business miles, I might just put the business miles as total miles.
Okay, let's just do that.
I would not use the actual expenses at all.
So he was asking about that because he says his car payment is really high, he said, and his insurance is really high, but we're not gonna. That doesn't matter. I need to tell him, let's not worry about that. Just track your miles, and this is gonna win.
If he wants to get the difference between the two, he needs to tell you the total miles driven. And so, if you're not gonna get those, I would delete the actual expenses out of there.
Okay. Well, I mean, I guess I can explain it to him and say, maybe if we just do it like 1 month, we can get a good sense. And if it if the business miles clobbers the other one, then we'll just say, let's just kind of always go business miles. Can you go back and forth, actually?
Yes.
From month to month?
You can get whatever's greater. And that's why it calculates out, if you put it in there correctly, it gives you the better of the two.
Okay.
You can also, when you have employees, this is the only time a Schedule C owner might have an accountable plan is if they're reimbursing employees. You can actually say, this employee, I'm going to reimburse you for this, but this employee, I'm going to reimburse you differently. And that's fine too. I just think it's better to just be consistent so you don't have any discrimination. But
okay, let's just keep all this. This is all stuff that people should be paying on their own cards. So his total reimbursement, so this is the same situation, y'all. So we're gonna come back over here. We got 685, 15, and I like Josh's simple method of we would change this to 685, 15. Now, what if they have an employee? You mentioned the employee. I have one client that I need to do this for. But he also has an employee, and he's actually been reimbursing that employee. And I've been telling him since October, like, hey, we need to figure out a way to document this. But that's my own conversation with him.
Employee should just submit something for reimbursement, right? Some kind of documentation for the employer.
Does he use this though for that person?
You could. There's also another worksheet, or you could make a worksheet, right, yourself, of say, hey, I bought this computer part I needed for work because I work from home, and it cost me $100 in internet, and you could say, hey, I'll reimburse you 40% of internet costs, right? You could say, and they want to submit something. It's just more proof, right? That makes sense?
Yep. So I see he actually reimburses her through Gusto payroll. And so Gusto journal entries it as reimbursement. Like right now, I just have it mapped as reimbursement. So I could just ask him for an expense report and add that expense report as the receipt for that item in the journal entry.
Correct. We have some client, I love Gusto, and they'll do that with reimbursements. It's, for some of those clients, it's their job to get proof of those reimbursements and keep them. But if it's your job, the more documentation, the better. You're really helping your client, and they don't know how valuable you really are, which is kind of sad.
Do you, so when you're seeing, so I'm just seeing him put a number in Gusto. He does it himself. Is there more that he can be doing on the Gusto side in terms of putting that documentation in there that'll get pushed to QuickBooks Online?
No, I wish.
No. Okay.
No.
Okay.
He should have something to prove the reimbursement, right? He's not just handing a money tax free. He needs some kind of receipt or something. Is what he should be saving. Because if you're audited, the IRS is going to say, "Oh, you made these reimbursements. Let me see the proof of what
that's wages." If you don't have the proof. Okay. Hey, Josh, do you have the course link handy? Nancy Greco's asking for it. But this is a good time to remind everybody, Josh has a course on this, which we're getting into the weeds. He has a course that's looking at the forest before you get into these weeds. It comes with this spreadsheet. I just had some questions, so that's why we're walking through it. And I like to kind of go slow, and I wanted to do that journal entry in public just so it was super clear to everyone.
I put it in the chat, but I don't think I can put it in the comments.
Oh, hold on. Let me. Here you go, Nancy.
Don't forget about the coupon code.
Yeah, and the coupon code, Nancy, is all caps S Corp Hustle. So anyone who's listening to this in the future, that will be below in the YouTube description, both the link and this code as well. If anyone has any questions, they can ask them now. Josh, I think I've gotten all of my questions, and this is great because I have a meeting with my guy, Mr. Allen, on Tuesday. And this has really been enlightening, and I'm going to be able to put this into action this week for myself. I have internet, I have a phone. I'm so appreciative to be able to start doing this right. And yeah, I'm not going to be pushing any boundaries, but I'm definitely going to do the stuff that I feel really, really good about. Maybe one day I'll get some new gutters and say it was a business expense. I don't know.
With being conservative, that's the approach I like to take with our clients too, is to be reasonable about it, right? I have some clients who like to be aggressive, and I say, okay, well, look, this is how I would do it, but you're more than welcome to be more aggressive. It's just, if you get audited, how can you defend that, right?
So you do bookkeeping as well as tax?
Yes.
Do you have clients that obviously have someone else as their bookkeeper? What's a good tip we can wrap this up? Like someone like me, let's say, oh, I know this guy, Josh, he's nice. You should go to him to do your taxes because I'm not doing their taxes. What do we need to do to be good for you?
Be comfortable. So we have clients that are bookkeepers, and we help clients just tax purposes. And I make sure it's very clear, like, I'm not going to take your clients even though we offer bookkeeping. And if they ask me, I'm going to tell them no. Our relationship is better. So make sure you have a good relationship with a tax professional, because I've seen where people get upset because they get their clients stolen. So just make sure you meet them. And then 2 is communicate with them how they want things, because not every tax professional does things the exact same way. And so maybe they're not comfortable doing the gutters, or maybe another one's more aggressive and says, yeah, that's fine, go ahead, deduct it. And that's, you want to have that relationship. And now as an S Corp, right, you're supposed to have annual meeting minutes sometimes, or as a corporation, maybe not as an S corporation, but it's a good time to be like, hey, pay your tax professional, have a meeting with all 3 of us. Let's get on the same page and document all this stuff together.
Okay. So are you taking new clients?
Sometimes, yeah, depends.
If y'all need a tax pro, guys, Josh knows what he's talking about. I got one more comment. Let me go over here. Let me see. Nancy says yes, she's looking for that. So he's in the market for new clients. If you're a good bookkeeper, Nancy, I know you are. So
bookkeeper, you make my job as a tax professional so much easier. That's the
goal. That's the goal.
It's having a good relationship with your tax professional or your bookkeeper. You are the first line of defense, because if I'm not doing the books and I'm just doing your tax return, I'm not sitting there looking at every single entry, right? That's not my job. You're only paying me to do taxes based on the information you
right.
So as a bookkeeper, it's your job to be that first line of defense. I can't stress enough, being a good bookkeeper is, you're worth more than probably what you're charging, especially if you're going into this depth and helping them. So.
I'm looking at my notes. One other question. Does any of this change whether a business is a cash basis or accrual basis company? Any of this accountable plan stuff? Nope.
Really.
Okay. I appreciate you so much. Y'all, Josh Standley, DKKaccounting.com, super smart guy. You're on the Intuit Council this year for 2 years, something like that, right?
Yeah, I'm an Intuit Accountant Council member. I'm actually a director of ACAT, which is a Accreditation Council for Accountancy Taxation. They issue credentials such as accredited tax professional. They might be coming out with a bookkeeper credential soon, which is going to be
okay.
I'm also on the board for a local community college for their accounting department. I love accounting. I didn't think I would love it this much, but it's just like, it's so important for businesses. It's ridiculous, and good bookkeepers are worth $1 million.
Awesome. Speaking of how much he liked accounting, I got this nerdy message on Facebook Messenger from him saying, I just saw your mouse pad. I love it. So everyone needs to, if you're a fellow nerd about accounting, get the accounting T-account mouse pad at the Bookkeeping Side Hustle store. Hey, I'll send you one. This one's on me. I'm gonna treat you to one of these for your help today. Yeah, and y'all, just so you know, he's doing this for totally for free. He didn't ask to be paid for this hour of his time. I really appreciate it. I'm not getting anything for this. It was just a resource. I feel really good about if a few of y'all buy his stuff, and I got this free advice today, I think Josh and I are square. This is, no money involved here, y'all. Buy the course if you need it. Use this interview, watch it again, and a couple months from now, when you get to this S Corp situation and you're needing to do it, maybe this will be all that you need. But if you want this cool spreadsheet that then you can just sort of like mass share with your clients, you'll look like a dang hero.
We update the courses every so often, update videos when we can, and I have time. And there's ways to comment inside the course too. So if you have a question, that's what it's there for. So.
I had one more thing to say, but I guess I forgot. Anyway, I appreciate you. Thank you for your help today. We will wind up, and I'm sure I'll be in touch. If anyone has questions, can they tag you in the Facebook group maybe too, or anything like? You're in our group sometimes. I know it's tax season, so I know it's busy, but
I try to answer when I can. Clients have to come first, but
sure,
happy to help if I can. So.
All right, he's in our group though, so feel free to reach out to me too if y'all need to be connected as well. I appreciate you. I'm going to sign off. Adios, everyone, and we'll be in touch. Bye.
Thanks, Kate.
Bye.